Hello and welcome to Gold and Silver Assets. It's Sunday the 1st of March 2020. So I'd like to start by apologising to my subscribers and viewers for missing last week's show. I did get a bit waylaid, however don't worry, it's all good and I'm back again this week. In fact, I was quite surprised at the response I got to missing the show. I wasn't expecting to be missed that much, so I'm very touched. And it's really good to know that I've got a really nice group of subscribers and viewers, so thanks for your messages. When I first started doing this channel, I did consider blocking the comments function because I was a bit apprehensive, as I really dislike the trolls that seem to pervade the social media and internet. And in fact, YouTube's the only form of social media that I've actually used. I'm not on Facebook or LinkedIn or anything. And how I am actually glad that I didn't disable the comment function, because I've had some really encouraging comments which has made a big difference, but also some of the comments have stimulated some very interesting discussion points. So thanks again for all your comments, it really has made a difference. Now, we've had quite a lot of drama last week in the markets. There was a massive drop of around 15% in many of the major stock indices worldwide, and that's something that traders haven't been used to, seeing such a big drop over a short time. And precious metals and their miners have also been dragged down by this. So is this a start of a reversal of the bullish uptrend? Now, in one of the comments on one of my previous videos, someone was whinging about how I'm always wrong and my targets would take an eternity to reach. And my answer to that is that it really depends on what your timescale is. You need to have insight into that. If you're a day trader or very short-term trader, this analysis is not going to work for you. So having insight into the strategy of your own trading, as well as the trading of whoever's analysis you're listening to, is absolutely crucial. Because if you don't take this into account, you're guaranteed to be frustrated. So what's my strategy? Well, my aim is to basically collect physical at lower prices during the dips. And I'm also looking at gaining leverage from the miners. So as a result of this, I'm going to have naturally biased views on things. And so my bias is that, of course, I want prices to come down so that I can buy more of the physical. And that will affect some of my thinking, and I freely admit that. And it's really important for you yourself to think about what things are going to bias your trading view. So let's start with looking at gold in US dollars on the weekly scale. And we can see this channel that I've drawn. I've drawn this by joining the two lows over here and cloning this line and moving it up to match some of the highs. And so price seems to have been moving backwards and forwards within this channel. Now, I've long maintained that this area here provides strong, formidable overhead resistance. So recently prices charged upwards and actually breached this channel. But then we saw a big red candle on the weekly scale and price was slapped down back to within the channel. So in order for me to turn shorter term bullish, I would need to see price to go above this channel and stay above it. But I'm doubtful that's going to happen. I think that was a fake breakout for all those bullish people. Gold has a way of punishing people, and I think what we're going to get is a final twist of the knife. In terms of the RSI, as we've seen before, I was joining these lows here, and I suspect that this may have been an early sign of some downwards movements. What we saw here with the RSI was that the RSI indicator moved down and then moved up to retest that trend line and is on its way down again. And so I would be even more confident of further downwards movements if we saw a break below this line here. Looking at the candlesticks on the monthly scale, I've just drawn a little box here to show that. And because, of course, we've reached the end of the month, this candle is complete. And this is a potentially bearish candle, which also supports a potential reversal. But we would need to see, another red candle after that to be sure of that. Now, I'm still working on my theory that price needs to pull back a little bit before we get the next big leg up. But the big question, of course, is where that bounce will occur. I'm thinking of two potential bounce points. One is around here at the 1500 US dollar level, and the other one is over here at around 1400, 1420 US dollars. And the reason I say that is things just felt quite overheated up here, both in the precious metals and the miners, and just the bullish sentiment was just too much. Overconfidence and hubris, markets don't like that. They have a way of humbling people. So I still think that price is going to pull back. But it's not bad news for gold. I think that that's actually going to provide gold with enough energy to boost it up through this overhead resistance, basically. And I'm no expert on Elliott wave theory, but I have seen some analysis which suggests that we're at the start of a massive fifth wave, and this is the first wave, possibly the end of the first wave, in which case we'd be looking for wave 2, which would be a pullback, and then would get a big third wave, and that would support my view as well. Now, I would only turn bearish and change my mind if price goes below this red line. That's our line in the sand, and so that's around the 1360 US dollar level. Now, one viewer asked if I thought gold was likely to go sub 1,000 US dollars. I think that's a low probability scenario. Of course, you can never say never, and nothing is impossible where the markets are concerned. And gold, as I said in the last video, is capable of surprising us all, both to the upside and to the downside. So I can't rule it out. And the only way that I would suggest that would be a possible scenario is if we'd got a break below this line here. The reason that I think that it's a low likelihood is that the fundamentals are just so supportive for gold. And also, I think at those kinds of prices, a lot of gold miners would just go out of business. And so even if prices were low, the supply, due to miners going out of business, would also drop a lot. Also, another big worry is that, let's say prices go to 1,000, maybe even 800 US dollars. I don't think you're going to be able to buy any physical. And as I said earlier, that's my strategy, is to buy physical. And one example of this actually came up in the weekend. So some of you might know I live in New Zealand, and on Friday the first case of coronavirus was confirmed in New Zealand. So remember, it's just one case that was confirmed. And on Friday afternoon and evening, all the supermarkets had queues going out of the door. You just couldn't even get in. And so basically they were swamped. And when we went to our local supermarket yesterday, which was Saturday, this is what we saw. And this is a photo that we actually took. So you can see that the shelves are empty. But of course, remember, the price labels are still here. Some of the things were on discount, but that's pretty irrelevant. The price doesn't matter if you don't actually have any products that you can take. So I actually think that a similar thing's going to happen to gold at some point. I don't know when. And so it's just something to think about there. So let's move to gold in US dollars on the daily scale. And in the last video, we anticipated a large move from a breakout above this trend line. But I did expect that price would be hindered at around the 1626 level. However, that didn't happen, and price actually blasted through that and went through the top of the channel. But of course this was short-lived, and price subsequently was slapped down significantly. And it seems to have found support over here at around the 1560 US dollar level. I think price is likely to consolidate around here and retest that trend line, but I think that's probably going to break, in which case that would trigger the move down to the 1500 US dollar level. The other possibility, which I think is less likely, is that price comes back up here, and I would only kind of change my views if price goes above the channel and the upper channel line provides support. Now, why did this happen? Why did we have this big down move? It does seem a bit strange, since the US dollar had actually weakened, and of course with what's going on in the world we would expect a lot of safe haven buying. But of course remember that we also had a large drop in the stock markets, and so people who are leveraged usually get margin calls, and so they have to sell whatever's in profit. And certainly there's a lot of people who were long gold who may well have big profits from the uptrend that we've had over the last year or so, and so selling gold may be required to meet those margin calls. The other reason why it may have dropped is that the US bonds seem to be the safe haven of choice at the moment. The other thing to remember, of course, is that the commitment traders report has pretty much record high open interest levels, and the commercials are net short here, and they're usually on the right side of the trade. So those are all things to consider. So let's move on to silver and US dollars on the monthly scale. And we can see that silver has been in a long-term consolidation here, and I consider this to be a bit like winding up of a spring, and so I am expecting quite an explosive move in silver at some point. Of course, the big question is which direction that move will be. If price goes below this red line, then I'd expect a large down move, but I just get a really hard time thinking of silver at $8 US, but it's not impossible. My thinking is that we're most likely to go down, hit that trend line, and then move up. Of course, if we breach this upper trend line, then we've got a lot of headroom, with the next stop being at around the 28 US dollar level. Now, when is this going to happen? Nobody can tell you. Timing is notoriously difficult to judge for these things. Moving up more closely to look at silver and US dollars on the weekly scale, we can see this channel here that we drew in the last video, and I expected this channel to upper channel line to provide some form of resistance, and of course price met it and then poked above it, but then got slapped down quite significantly there. There's a big red candle that we've got. These fake out breakouts are really problematic for traders. So the question I have is, where's price going to go from here? If we look back here, we have what appears to be a double bottom, and it did actually meet its target and actually exceed it. What I'm thinking is this a double top that we're seeing? In which case the target would actually meet this lower trend line here, and that's the red line I was talking about in the last slide. If price goes below $16, then I think it could well reach this trend line. It might even poke below it, because silver likes to mess with people. It's a real wild child here. So let's look at the gold-silver ratio. And at the moment, it's already as high as 95. And so you might think, well, doesn't that go against the bearish thesis? Because there's not much headroom here. It's already, at decade highs. Actually, there's no limit to how high the gold-silver ratio goes, and it has been as high as 100 in the past. Looking at the recent chart, so this is on the monthly scale, by the way, I think price seems to be moving in this channel that I've drawn here. And the way I've drawn it is to get the multiple lows that we've hit and clone this line and then move it up to fit with the highs. And this suggests that we actually do have some headroom. It could go up to about 99, even 100, depending on how long things go on. Now, it doesn't necessarily have to do that, but it's a possibility. Okay, so let's move on to look at the miners. And so this is the GDXJ on the weekly scale. And we previously had this question of whether this was a cup and handle, and I was skeptical because I thought this right lip was a little on the low side. And I was also a little bit skeptical because we had this gap here back in 2013, which has proven to be resistance in the past. And indeed, it continued to remain as resistance. And in fact, that gap still hasn't closed yet. In fact, there was quite a dramatic rejection there. And in the last video, I floated the idea whether this was actually forming a double top, and it's starting to look like that might well be the case. If it is, then we'd be targeting this level here just above 20, and that would be good because it would actually close this gap here. I don't know whether that support is going to hold or not. It really depends on the situation at the time. So if it does break, then we'd be looking at between, the 16, 14 kind of levels below that. But let's see what's happening in the world at that time. And we have a similar story with the juniors. So this is the GDXJ on the weekly scale. And in the case of the juniors, it didn't even get close to even the start of the gap. So I think there's still a bit more downside to come, and the targets would be either 30 or at worst 20. Could even go lower than that. We just don't know what's going to be happening in the world. And it might not necessarily have the same pattern that we see in the majors. We know that juniors do tend to get hit harder than the majors, and it may be that with the majors it bounces off the upwards trend line, whereas with the juniors it goes down further. And the reason that I am so bearish on miners is that we have to remember that gold mining and silver mining stocks are still stocks, and they get hammered along with the general stock market, which I think is looking a little weak at the moment. So that's what I think for this week. Thanks for listening, and nice to see everyone back again. Don't forget to like and subscribe, and see you next week. Bye.